Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances so that you can apply those lessons to your own life. I'm your host, Ismail Humet. In this episode, we are celebrating an important milestone. It's my 10th show, and I thought it was a great opportunity to jump on here to give some quick updates about the show, do my first solo episode. But what I really want to dive into is the economy and what I see happening, because I think this is going to be my most important episode by far. You've heard the phrase, 1 in a 100-year storm. There are some things that I'm seeing brewing that, in my mind, makes it a high probability that something like that's happening in the economy. And of course, it's always the regular people that get hurt the most. So if you're listening to this, whether you're an entrepreneur or you're an employee or you're retired and you saved up a bunch of cash, the money that you've worked so hard for is in real danger. So I look forward to diving into why I think that is, how we got here, and what you can do to protect yourself and your family. Let's dive in. All right, it's a little intimidating and weird to be talking by yourself into a microphone. I'm not used to this. I haven't done this before, but you know what? Let's roll with it. The great thing about having your own show is that you can do whatever you want. And I always wanted to be open to experimenting and trying different things because you never know what might work. So for me, the message that I want to get across in this show is really important. And I've been having these conversations a lot recently with family and friends. So I thought, why not broadcast it out to the world at great risk to my reputation? But I just think it's the right thing to do. So hopefully you find this valuable. But first, let's dive into some updates. So you may have noticed I haven't published an episode in a while, and there's a good reason for that. I am happy to announce that I just had my second baby. I welcomed a beautiful baby boy on February 16th. So that totally blew up my routine, shocked my world, and tore up my schedule. Having two kids is way harder than having one. Way harder than I expected, because before it was just two parents, one child. You can kind of sleep in, the other one watches the kid, and now there's no sleeping in, and there's no sleeping at all at night either. So it's been rough, but it's great. So that's kind of explaining why I haven't been able to stick to a regular schedule. I don't want to commit to doing a weekly episode because I just don't know what's going to be happening going forward. But I want to get back in the groove of doing shows regularly and posting them. Even if it's not on the same day each week, but posting them regularly. So a couple of updates on the podcast. For people who know me, you may know the story. I just wanted to start this show as an experiment, right? Because I love having conversations with interesting people. And I thought, why not record it and put it out there? Maybe other people would get value out of it too. Like I listen to other podcasts and I love it. So I didn't really have a goal. It was kind of like, let's just do a few and see what happens. And I've been blown away by the response so far. It's amazing. Like people all over the world writing in and letting me know that they're getting value out of the show, which makes me want to keep going. And it's funny because I took a break because of having a baby. The unfortunate thing about that is that I was just getting into this awesome groove, right? I just saw like a week ago that I hit number 60 in the U.S. entrepreneurship category, which is arguably the most competitive podcast category in the world. And I was ahead of people that I listened to for like the last 5 to 10 years. So that kind of blew me away and showed me like, hey, this is something that might be working. I don't know where it's going to go, but I enjoy it. People seem to get value out of it. So maybe I should double down on this and really make something out of it. So the other thing is that I'm getting now, I guess once I got into that place in the ranking, once you get into the top 100, you get on a lot of people's radar. So now, instead of me going out and trying to get great guests, I'm having these incredible, like even some celebrity names reach out to me, like their agents are reaching out to me to get them on the show, which is amazing. Like I'm having people send books to me and try to book a session on the show, which is mind-boggling. I was talking to my wife about it, and she's like, because we got an email from somebody that we both know. Hopefully you guys know this person too, and we'll get him on soon. And she's like, this is crazy because you just started a couple weeks ago recording this like in your home. And now you have all these famous people that want to come on the show. So that's the power of the internet. And for people listening, it's the power of just going after an idea and just trying stuff out and seeing what happens. So that was my initial goal, was just to kind of test this out. But now, like I said, I want to double down now that I see that people are really getting value out of it. I'm having a little bit more of a level up in goals. So it's not much. I think with the impact on my schedule now with a growing family, I have less time. It's really hard to get things done. The parents in the audience know that. And I'm trying to find ways to do stuff without dropping too many balls. So my goal and dream at this point is to be able to do the show and generate enough revenue to at least pay someone to do the production, the editing, the uploading of the episode, like handle all that so I can just focus on creating great content and interviewing awesome people. I think that's what I'm good at. And if that's the only thing that I can focus on and pass on the editing and everything else to someone else, it'll allow me to put out more shows for you. And like a little cool little thing for me is if I can pay for a cup of coffee, because I'm drinking a cup of coffee during every recording. So if I can get the editing paid for and get myself a cup of coffee, I'm going to be a happy guy. It's not much. So with that being said, I think what I'm going to experiment with next is maybe throwing in some ads here and there. Obviously, it's only going to be products or services that I personally use and like. So it's not going to be like these canned ads that you hear anywhere else. I'll explain to you how I use it, why I like it. And if you want to try it out, you can use my link. And usually there's a benefit to using my link to you and me. So they give me a little bonus and you get a little bonus. So it's a win-win. Let me see if that turns into anything. Again, my goal is to just pay for a lot of the work that goes into editing the show and whatnot. So that's the update there. And with that being said, let's take a look at the first ad. Check this out. What's something that you started using during the quarantine that you will keep using after it's over? For me, I started using this thing called ButcherBox. I love steak. Sorry to offend you vegans out there, including my wife. But I remember when the quarantine first started, you're locked at home. You wanted to find ways to get food delivered to you. But I didn't want to pay crazy amounts of money for steak that you can buy at the grocery store for a lot cheaper. So I tried all these different ones. Maybe I shouldn't name them, but I tried a lot of different ones. And I ended up trying ButcherBox. And to me, that was by far my favorite. Highest quality. It's grass-fed beef, organic, antibiotic-free, all that good stuff. Yeah, they deliver it straight to your door in this like freezer box. And I found personally that the price of these steaks are, or at least comparable to what I was paying in the grocery stores, the Costco's or whatever, and much better quality. I don't really buy chicken or seafood from them, even though they have that stuff. They also have pork. I stick to mostly the steak because I find the price is great and the quality is great. So I strongly suggest you check it out. You pick the kind of meats that you want into a box, and then every few weeks you can set it to be a schedule, or you can delay it to whenever you want. But whenever you want a delivery, you pick the meats that you want. They deliver to your house. What I really like about them is that they have deals all the time. So to sign up, you have to commit to like a box of meat. But then they also periodically offer these crazy deals where you get New York strip steaks, ribeye steaks for half price. So I like to add a lot of those deals, and my box gets bigger and bigger and bigger. But it's a good excuse to throw on the grill and have a barbecue. So I strongly suggest you check it out. I've been very happy with them, and the few times that I've had issues with my order, I just chat with them, online, and they take care of it. Amazing customer service. So if you do want to try it out, there's a link to it in my show notes, and by using my link, you get $30 off your first order. I think that's a pretty generous thing. So I thought I'd share it with you guys. If anyone does try it, or if anyone already uses it, let me know how you like it. Show me some photos of your skills, because I've been working on my grilling steak skills during quarantine. So I can throw it down with anybody. All right, so hopefully that's not too much of an inconvenience to anybody out there. Again, there's no obligation, but if you do want to try something out that I talk about and you use any of my links, you're helping support the show. The other thing that I wanted to mention is that I think it'd be cool to do a Q&A episode where people can submit audio questions, and I'll take them, I'll put them in the show, and I'll answer them live. So it's like free consulting to anybody out there. So if you have any questions that you want to ask me about anything, there's a link in the show notes that you can click where you can record your question. I'll get it, and then I'll take care of it from there. I'll put it in the show. I'll answer your question, and it sounds like something fun to do, so let's try that out. Otherwise, one other thing that I want to mention is you can actually now book a session with me. You can schedule an appointment on the website. This is a paid consulting arrangement where you can book a half an hour of my time, and I can dive in deep with you one-on-one and help you solve anything that you're working on or struggling with. So if that's of any interest to you guys, check that out. But otherwise, I just want to jump into the topic at hand here. And I've been thinking about this for a while, actually, and I kind of regret not doing this a lot earlier, because so far I've been right. And the people that I speak to in my personal life will vouch for me on that. I've been the weirdo yelling about this stuff for like the last year. And everyone thought I was crazy, and then slowly but surely start coming around and saying, hey, it's what you're saying makes sense, and I see it. So what do I do? And I've had this happen enough times where I'm like, my friends actually told me, why don't you do a show on this? I think people really need to hear this, and no one really talks about this stuff. So that's what I'm trying to do. So before I really jump into it, I just want to caveat that, and again, I'm just trying to do this off the cuff in one take, so please forgive me and bear with me. And for people who are economists out there or historians out there, I am not trying to be like a textbook accurate here. I'm just trying to talk in layman's terms, very casually, off the cuff, because I think the average person, at least what I see for people that I talk to, they need someone to break it down in a very simplistic fashion to get the point, right? So I'll leave the economists out there debating things like the terminology and the dollar numbers and all that stuff. For me, I'm just trying to talk to people like I talk to my friends, right? So imagine we're at the bar having a drink, and I'm just chit-chatting with you. So here's basically the gist of what I see happening. I think that, and you might start hearing this a lot more now, there's a great danger of huge inflation happening. And in my opinion, it's already happening. Like I said, I wish I did this earlier, because I think it's pretty far along. The problem is that most people don't realize this, and it has a huge impact to people. It's called the invisible tax on like the middle class or the lower class, because it's kind of a sneaky way of sapping people's wealth. And I don't really like to bash the wealthy people, because I aspire to be wealthy, right? That's the whole point of the show. But they benefit from inflation. So if you're in the upper class, you actually benefit from inflation, and everyone else kind of suffers from it. So if you're not understanding what I'm saying so far, please stick with me. I'm going to try to break it down for you in a more simplistic fashion. So how did we get here? I think a very brief history lesson. After World War II, the United States emerged as a huge superpower, right? And like the number one superpower in the world. And usually after a major event like that, like a world war, after it's over, the countries get together, the world gets together and kind of like rewrites the rules going forward, right? So you divide up land, you divide up resources, and you kind of rewrite the rule book. And there's this thing called the Bretton Woods Agreement, where after World War II, the United States was the most powerful, the richest. They had the most gold. Like, they were on top, and no one could argue against it, right? So they basically wrote the rule book. And the way the world worked before that was everyone had their own currency. They all had their own gold. I'm trying to simplify this, but afterwards, what happened was that basically the United States became the reserve currency. The dollar became the reserve currency of the world, and every other country tied their currency to the dollar. So China, Russia, the European countries, they all tied their own currencies to the US dollar. Now, why would they do that, right? You might ask. Pretty much because at that time, part of this agreement was that the US dollar was not only backed by the government, it was backed by the gold in the central bank's vaults, right? So all the gold that America had in their vault, that was used as a way to back the dollar. So it wasn't just a piece of paper. That piece of paper was like a portion of the gold in the vault, right? So that's how it started, and that makes sense. You know, they have a $500 billion of gold. There's $500 billion in the world, and everyone felt comfortable, and they tied their currency to the US dollar, and everything was great. It worked out for a while. The problem is that we are operating in an inflationary economic system. So what started happening is that, let's say there was $500 billion worth of gold in the vault, right? And there was $500 billion in the world printed. there are benefits to inflating, right? And when I say inflation, I'm talking about having more dollars in the world. So like printing more dollars. There are numerous benefits to having more dollars. So these central bankers, the American economists said, hey, you know what? Instead of having $500 billion out there, even though we only have $500 billion worth of gold, again, I'm really simplifying this. Why don't we print another $100 billion? So we'll have $600 billion in the world, but still have the same amount of gold. And this is I think this is called a multiplier, where instead of it being 1 for 1, now it's like 1 for 1.1. And people are like, hey, it's not a big deal. What are the odds that everyone brings their dollars into the vault and asks for their gold? Because at that time, you could actually take your money to the bank and say, hey, I have this $100. You know what? I want to exchange it for gold. Like that's how well backed the dollar was with gold. You can exchange it for gold. And okay, so now it's 1 to 1.1. Why? Having more money out there encourages people to invest it and get that money to work. So this is like the big benefit of real estate, right? Where you're buying an asset now at the current price of $300,000 for a home. You're locking in that mortgage. And in 20 years, if you rent that property out, right, at the current rental rate, let's say you get $1,000 a month, in 20 years, you'll get a lot more, right? You'll get a lot more than $1,000 a month because of inflation. Everything costs more, people make more because there's more money in the system, and then it becomes so much easier to pay that $1,000 mortgage because now you're charging $2,000 rent, and 30 years later, you're charging $3,000 rent. Again, just simplistic examples. So the real secret to like real estate investing is that a lot of the home is paid through inflation, and it takes a while for people to really grasp that concept. You're locking in something at current prices, you're paying it over 30 years, but over those 30 years, you're benefiting from inflation. You're charging more rent, right? People are making more money. So that's the reason why like these politicians and economists all over the world, not just in America, they like inflation, right? It's a popular thing. Let's get more money into the system. Let's get more things happening. Everybody wins. Eventually you start running into trouble, right? Because you can only go so long without having some negative impact. And we're at that point now. So there's constantly, it was 1 to 1, then it was 1 to 1.1, 1.2, 1.3. And it got to a point where there was a fear in the people that, hey, they're printing a lot of money out there and I'd rather have the gold. So a lot of people were exchanging their money for gold, and it was taking money out of the vaults, and it became a problem. So there was actually a point in Americans' history where they outlawed gold. It was illegal to own gold. And then there was a famous moment where the United States came off the gold standard. It was a major like historical event where they basically said, that agreement that we had, too bad. We're going to get off the gold standard, and we're just going to have the dollar just backed by our word, backed by our military, backed by our tax receipts. So it shifted. That's a major shift that I want everyone to understand. It was backed by gold. You can exchange it for gold. And now it's really just a piece of paper that's worth something because the government says it's worth something, right? That's a huge shift. So that's kind of the brief history lesson. And obviously since then, there's inflation every year. There's more money being printed every year. And it's just kind of keeps going. Imagine a bubble that's kind of keeps getting bigger. You keep inflating the bubble, and that's happening over decades, year after year. And people understand this if you explain it to them in different ways. So, for example, I'm not an old guy, right? I'm not old, but when I was a kid, my parents would give me 50 cents. I'd go to the store. I'd buy a drink for $0.25 and a bag of chips for $0.25. It's not like that anymore. Now it's $5 for a cup of coffee at Starbucks. Now it's just more expensive for everything. And when you explain it like that, everyone's like, yeah, groceries are more expensive. I need more. I used to spend $100 on a trip to the grocery store, and I spent $300. So that kind of explanation gets people to say, yeah, I get it. I understand inflation. Homes are more expensive. Like if your parents bought a home however many years ago, and you're trying to buy a home now, it's way more money. Another example I like to use to explain this to people is imagine that you have a Michael Jordan basketball card, right? And there's only 10 of them in the world, and you have one. That's a pretty valuable card, right? It's 1 out of 10 copies in the world, and it's valuable. Now, let me ask you, what would happen if the company that made that card, they said, hey, this Last Dance documentary came out. Everyone's talking about Michael Jordan. Why don't we do a special print and do another 100 cards? Let's just print another 100 cards, just to honor the event. What happens to you if you owned 1 of 10? What happens to the value of your card? Obviously, it goes down drastically because now there's not 10, there's 110, right? And that's basically what is happening when there's a lot of money constantly being printed, right? The money that you have in your pocket, the money that you have in your bank account is not worth as much as it was last year. Every year, it's going down in value. The reason this is so hard for people to understand is because they don't see their bank account go down, right? If you saved up $100,000 in your bank account, it still says $100,000. As a matter of fact, they gave you $2 of interest, so your account is even higher, but it's not as valuable. That's what you have to really grasp. The number is staying the same or even going up slightly, but it's not as valuable because of inflation. So the bank gives you, now they give you 0.1% interest. Inflation is 2% according to the government. So you lost 1.9% a year, every year. So the old days, a lot of us have listened to our parents where they say, hey, save, a penny saved is a penny earned, save your money, save your money. There was a period back then where the interest rates were so high, you could put your money in the bank and get 15% interest. So they're coming at it from a different world. We're in a world where you don't get any interest. It's really zero, basically. You're losing money by keeping your money in the bank because of inflation. So, all right, so that kind of tells you a little bit about inflation, a little history lesson of how it began and where we are now. But what we're seeing happen now, and I think everyone listening has seen this, obviously, I'm talking from the United States perspective, but really what I'm saying applies all over the world, which makes this so much worse than any period before. Because of COVID, and this, again, I don't want to blame this on COVID because the seeds were being planted for this over many, many, many years. COVID just kind of accelerated it and put the fuel on the fire. So because of this pandemic, global pandemic, we needed all the stimulus, right? People couldn't work. Everything was shut down. You know the drill. The governments, and I don't blame the governments. I think there was really no choice at this point, but they started printing tons of money to help the businesses, to help people that can't work. And you see this, there's unemployment, people making more money on unemployment than they did at their job. There's money being given to businesses that doesn't have to be paid back. And this is happening all over the world. So we had the first stimulus bill, the CARES Act. We had the second one where there was $600 checks. We just had another one with Joe Biden where it's $1.9 trillion. I'm hearing that he's going to do another stimulus package in April. And on top of that, I think as I'm speaking, in a couple of days, he's supposed to release his plan for a $3 trillion infrastructure package. I don't know, I'm not that good in math, but that's a lot of trillions of dollars right there, right? If you add that all up, that's a lot of trillions of dollars. We're just throwing out the word trillion like it's no big deal. So I said, let me check the Federal Reserve website. So I went on there. This is the official federalreserve.org website. I'll put a link to it in show notes. And I said, how many dollars are there in the world? How many printed dollars are there globally? And I think it said, as of February 2021, there was approximately $2 trillion in the world. So just, you don't have to be a rocket scientist here. There's 2 trillion printed dollars in the world. And they just printed 2 trillion for Joe Biden's bill. He's doing another 3 trillion for the infrastructure. There's another stimulus package coming. There was trillions last year. So what happens there when you triple or quadruple the money in the world? What happens to the money that you have? Right? That's what I want you to think about. And I think there's even talk of things like they're going to wipe out student loan debt up to $50,000. Like, so now, hey, you owe money. Don't worry about it. Don't worry about it. So like the example I said earlier about the debt you have on buying a home, that mortgage that you have, a lot of it's kind of paid off by inflation, right? So I hope that makes sense. Now they're saying, you know what, we're going to waive student loan debt. Why not? So that's like unreal inflation. Who would have thought that we would come to this point, right? And what is this causing? And by the way, before I get into that, the Fed is now, this is something that I have never seen in my lifetime. The Fed is now basically saying they want inflation. They're saying that they're targeting to go over 2% inflation, and that's what they want. And they also want to keep interest rates low. So I don't ever remember a period in time where they want high inflation and low interest rates. So this is very unique. And I guess, how do you explain the impact of this? So basically, open your eyes and look around, right? And I had a lot of my friends asking me this, where in the midst of COVID, extremely high unemployment, people couldn't work, businesses got shut down, stock market was at record highs. And everyone was asking me, how does this make sense, man? How is the stock market at record highs and the economy's in the worst shape it's ever been in our lifetime? Inflation. So there's something called the Cantillon effect, which is kind of a little bit more advanced. So I'll just link to it in the show notes for anybody who's interested. But the point of it is this, that when you're printing money, that money basically flows, most of that money basically flows to the wealthy. And it ends up in assets, right? Like in the stock market, in real estate, stuff like that. And, not to be surprised, what happened to the stock market? What happened to real estate? I've been trying to buy a home for the last year. I have never seen anything like this. And I've flipped homes before. I've been in real estate for many years. I have never seen anything like this. I see homes that are listed for, $600,000 around me that sell for $900,000, like in a day. $300,000 above asking price in a day. Inflation. I see, and I'm sure you see headlines about this too. Now they're selling digital art, NFTs, $69 million for digital art painting. I see Pokemon cards booming now. I see collectible sports cards. I see all this stuff booming. And I'm sure you see a lot of this stuff too. Why? Inflation. So we're at a point now where basically cash is trash. You've always heard that cash is king. We're at a point now where cash is trash. And everyone kind of knows it without really saying it or knowing it. It's become a joke. People get stimulus money, they just throw it in the market. They throw it in cryptos. They throw it in and play with it because it's pretty much become like monopoly money at this point. So the other thing that I want to touch on is, why do interest rates matter? And why is so here, let me get into this first. The Fed is saying that the inflation rate is under 2%. They want to target 2%, but it's okay if it goes a little bit over 2%. Now, after I just explained everything to you, where there's $2 trillion in the world and they just printed, $10 trillion, how in the world does it make sense to you that there's 2% inflation? It doesn't make sense to me. And if you really dig into it, the CPI, the Consumer Price Index, the actual official inflation number that the Fed uses, I feel is manipulated, and it's not the real gauge of inflation. For me, if you want to look at inflation, they're measuring it by a basket of goods. And if you really dive into the granular details of how they're measuring, what they're measuring, to me, it's really easily manipulated. And why would they want to manipulate that? Because a lot of things are tied to the CPI. So if you've had a job, you get a raise, you get a cost of living adjustment. They give you a 2% raise. Where does that 2% come from? The Fed. So if they start to say, hey, you know what, inflation, the real inflation is actually 15%. A lot of things it would be a domino effect. People can't give you raises that quick. The mortgage market, it would affect so many different things that they have a huge incentive to keep it low, or say it's low, or make it seem low. All the while, while the middle income workers and the lower income workers are being told, hey, it's 2%, here's a 2% raise, the wealthy are constantly benefiting because, like I just said, with inflation, assets go up in value. The stock market, real estate, anything basically goes up in value because there's more money in the system. The regular people out there that are working paycheck to paycheck and, don't have a huge savings saved up and don't own anything, don't own any investments, rent, and don't own a home, they're getting crushed. They're getting crushed. So I guess the other thing that I wanted to touch on is that I'm seeing this weird dynamic at play where, at my bank account, at Citibank, at Chase, Capital One, whatever, any of these major banks, I'm sure you see the same thing. You're getting 0.01% interest or 0.1% interest. You're getting nothing, right? But I'm seeing this really interesting dynamic at play where if you go to like these new banks of the future that are in cryptocurrency, like BlockFi is one that I use. You can put your money in BlockFi and basically get 8.6% interest. So very quickly, the way you do that is you put your dollars into BlockFi and you convert it into a stable coin. I don't want to get too fancy. It's basically the same thing as a dollar. It's not risky. It's just a cryptocurrency that's pegged to the dollar. So it's equivalent to having a dollar. So you put your dollars into BlockFi and you get 8.6% interest. How does that make sense? How does that make sense that I can get 8% interest here, but the bank gives you 0.1%? So there's some weird things going on that I can do a whole other podcast on that don't make sense, and to me is a warning sign. Now, if you follow the stock market, you're seeing just now, finally, there's a fear of inflation. So even though the Fed is constantly coming out and saying, don't worry, we're going to keep it at 2%. Maybe it's going to go a little bit over, but it's going to be temporary. Don't worry. People don't really believe them anymore because they're seeing what I'm telling you. I'm seeing it. I think what you're all seeing. So why would people get afraid of higher interest rates? What's the big deal? The way stocks are valued, the way any investment really is valued, is through discounted future cash flows. So basically, how do I explain this very simply? You look at a business and you say, hey, you know what? For the next 100 years, this business is going to make, $100 million, $1 million a year. Keep it simple. So over the next 100 years, it'll make 100 million. How do I value that right now? Right? So if I want to buy that business, what would I pay for it right now? And the analysis that people do is that they see all the future cash flow that they would make in that business, the 100 million, and they discount it at a risk-free interest rate, right? This risk-free interest rate is usually the treasuries that the government issues, but we don't need to get into that. It's basically like around 1-2%. And then they add in the inflation on top of that, so it's 4%. So basically what I'm saying is that, hey, I could put my money into a risk-free investment, risk-free, and make 3-4% a year. So for me to buy this business, I have to at least make that much money, at least, right? Because this business is not risk-free. There's risk. So they discount all those cash flows by that interest rate that they could get through their risk-free investment. So hopefully that makes sense. So as the rate goes up, as the interest rates go up, the discount that you're making on future cash flows goes up. So it makes the value of the business lower right now. It makes the stock lower right now because you're using a bigger discount rate. I hope that makes sense. It's a little easier to see if you do it with a formula. So maybe I'll find something online and put it in the show notes for you. So there's a fear right now of this inflation affecting stocks and whatnot. But I'm going to explain to you later why I personally wouldn't be that concerned. So I explained to you kind of the history, what's happening right now. The only thing that I would add on top of that is what I think is going to happen is that cash is going to continue to get really devalued. And on top of that, the other thing that people don't think about is that if you dig into the financials of the government, even these individual states or counties in America, these municipalities around America, you would see that they're in real trouble. And it's not that hard to understand why. So they're giving out record unemployment, right? All these states around America. And again, this applies to all the countries in the world. They're giving out record amounts of unemployment. On top of that, because there's no business, people aren't working, they're collecting less in taxes. So the sales tax, the income tax, any tax that you have out there, they're getting way less now because people aren't working. They're giving out more money, they're making less money. On top of that, they're spending more money because of COVID, testing. There's a whole bunch of things that they're spending money. So they're spending more, they're making less, and they're giving out more. Now, I'm not a rocket scientist, but what I've been telling all my friends and family is I think that there's no way around it that taxes are going to go up. And this is not meant to be a political thing about Democrats or Republicans. I think it doesn't really matter at this point. Whoever is in charge at whatever state you're in, they're going to have no choice but to increase taxes. The only other thing that they can do, which is what I think they prefer to do, is keep printing more money. That way they don't have to raise your taxes that much because they're going to just flood the system with more money. And that's, like I said earlier, a more favorable way because people don't see the impact of that. Everyone's happy that they're getting checks. And again, people need checks. I'm not judging that. I'm just saying that there's an impact of all those checks being sent out, and that's devaluing the money. So there's people that listen to this show that have followed me over from my other podcast in the event industry. And I see people so excited right now that, hey, events are going to come back. I'm getting bookings. And kind of out of excitement and desperation, they're just trying to book things up, even if it's at discounts. And you have people, funny enough, that they're saying, hey, can I get the COVID discount? Meanwhile, everyone's got more money than they've ever had. I'm generalizing here. Obviously, there's people that are really suffering. But generally speaking, if you look at the data, people have more money saved. People have more cash now than they did before, generally speaking. Yet everyone wants a discount, and businesses are giving discounts. At the same time that the value of money has gone down drastically. So my opinion on this, what I'm doing is I am not rushing to book events and fill up my calendar because, for one, there's going to be a huge boom in demand for these types of things because people weren't able to do events, they weren't able to travel, and now they're all going to want to, and there's not going to be enough supply. So there's going to be huge demand, and eventually the supply will run out. I'd rather wait until that supply runs out, and I'm one of the few people left, and I can charge the rates that I think I deserve. If anything, you should be increasing your rates now, not decreasing them. Because if you were making $1,000 an event before, you would need to charge $1,500 an event now to get equal value because of inflation. I personally believe the inflation is realistically more around like 15, maybe even up to 20%. And it may increase from there. And I'm looking mainly at the money supply, how much the supply of money has increased. That's how I'm looking at inflation, because I think that's what's impacting the rise in stocks and collectibles and crypto and all that other stuff. Quickly, the other thing that I wanted to touch on is I've mentioned other countries around the world. What I've just said about America, you can multiply that by 100 because it's happening in all these different countries around the world. And there are some extreme examples right now where I see headlines of Argentina. They're having like crazy inflation of like 30% a year. The interest rates in Turkey are like 16, 20% already. It's for the other countries, it's even worse because, again, they peg their currency to the dollar. So there's huge power to being, like, basically America is the global reserve currency, and they have the keys to the printer, right? They can print they can print more dollars. If America can't pay their debt, right? People keep talking about the deficit. If they can't pay the deficit, they can just print more dollars. Other countries can't do that. And because the dollar is what they peg their currency to, because the dollar was the reserve asset, the reserve currency of the world, a lot of these countries deal in dollars. Like in their banks, they hold dollars. They don't hold their own currency. They do hold their own currency, but they hold a lot of dollars. So what's going to happen when America prints more money? Because they have to satisfy their debts. The value of all the money in all the dollars in China, all the dollars in Russia, all the dollars in Germany, that all goes down. And when that goes down, the value of their currency goes down. And it has this domino effect through the country. Hopefully this is painting a picture that this is really, really bad. So I think I'm going to stop there. Again, if people have questions, feel free to submit them. There's a link in the show notes that you can submit your audio questions to. I'd love to dive into detail more on whatever you want to dive into more or whatever wasn't clear. But now I want to talk about what should you do? What could you do? And again, what's the legal disclaimer that you're supposed to have here? This is not financial advice. This is just my opinion. Use any of this at your own risk, yada, yada, yada. I'm going to try to temper what I say here because I personally have taken some very extreme measures to prepare for this, and so far it's worked out really, really well for me. But I don't want to recommend extreme measures. I'm going to just lay out what you could do or what you should be thinking about. So we clearly outlined that cash is trash. It's going down in value, and it's going to keep going down in value. So you don't want to hold cash, obviously, right? Again, if you can understand that concept, then I did my job. Because people have such a hard time understanding that, again, because the bank account number does not go down. And they're like, what do you mean? I still have 100 grand. They don't realize that 100 grand is worth 50. And try to buy a house and you'll see. Try to buy a Bitcoin and you'll see it's a lot, like everything costs more, so your dollar doesn't go as far, right? So that's the main point I want you to take away. So you want to consider limiting the amount of cash that you're holding, right? So most people have their whole life savings in cash. If you look at the average American, most of their net worth is in their cash and the value of their home, right? The home is going to be, it should be fine because as there's more money in the system, the value of real estate goes up, right? So that should be fine. But the cash in the bank, that is, to me, it's a liability. You're losing a lot of value right now having things in cash. What do you do instead? You acquire assets. I've mentioned a bunch of these before. It really almost doesn't matter at this point. Having anything other than cash is better than having cash, in my opinion. Whether you're into, and look at what you're into. Are you into Pokemon? Get some Pokemon cards that are valuable. Are you into antique cars? Get an antique card. Do you like watches? Why don't you start collecting some watches? You don't have to be a stock guru. You don't have to be like an options trader to protect your wealth. You don't have to be a crypto investor, right? You can put it in things that you're passionate about, that you understand. So, in my opinion, anything is better than cash as long as it's something that's kind of a collectible, has some rarity to it, right? So, for me, when I look across like the landscape of what is impacted by inflation, really, like the government, when they measure the CPI, they're looking at things like the cost of bread, the cost of groceries. But when there's more demand for bread and groceries, they can just make more bread and groceries. Like there's not a limit on how much bread you can make. There is, but you get my point, right? They can just make more bread, no problem. What I look at is things that has a more limited supply. And how do those prices react? That's how you see inflation. So for example, and you're going to see this now if you haven't already, right now, people are trying to buy homes. They're trying to move away from the city. They're trying to get bigger land. They're stuck at home. What happened to real estate? It shot up like crazy because there's only so much, right? What's going to happen when everyone starts to feel comfortable about traveling? What's going to happen to the hotel rates, the airplane ticket prices? I think they're going to go way up because there's only so many seats in the airplane. There's only so many rooms in the hotel, right? There's only so many Airbnbs and dates available. There's only so many venues available to have your wedding at, right? So all those weddings that were delayed, you're going to have to pay a much higher price to get a date. Anything that's kind of has a limitation like that, colleges, they can only have so many students, right? Tuition goes up. Healthcare, they can only take so many patients. it goes up. So those things that have somewhat of a limit, or it's harder to increase the supply quickly, that's where you really see the impact of inflation. For me, the best example is Bitcoin. The Bitcoin is like the only thing in the world where it's a totally fixed supply. People compare it to gold. There's more gold in the ground that you can dig up. Obviously, there's a limited number, but there's constantly more gold being digged out. And Bitcoin, doesn't matter what happens. There's only 21 million coins available. That's it. That's it. Even if we get to the year 3000, there's only 21 million. There's never going to be another coin. It's a fixed supply. It's kind of like a work of art, a painting, like a Vincent van Gogh Mona Lisa. There's only one, right? That's very valuable. So those things go up in price throughout time. So you limit cash, you acquire assets. And I don't think that you should, I'm not saying that you go crazy and you get rid of all your cash, although maybe I may have gone to some extremes like that. You do need to have an emergency fund, obviously. You do need to pay your bills. Like, you can't pay your bills in a collectible Pokemon cards, right? You have to pay it in dollars. So you have to have some cash set aside to pay your bills, to live, to buy food, to pay your mortgage, etc., etc. But after that emergency savings, in my opinion, I would strongly urge you to reconsider having anything other than that in cash. So now, if you want to go to an extreme level, which I'm not saying that I recommend, but there are people out there in the world that are really believers of hyperinflation coming. And like, there's this guy that I really follow, Ray Dalio, who I learned a lot of this from, actually. He runs the biggest hedge fund in the world. Like, he manages the most money in the world. And he's the first person that I saw say cash is trash, and everyone laughed at him. But he wrote this incredible analysis where he looked at like the last, I was like 600 years, and saw other examples of inflation, how it happened, why it happened, what happened, how do you protect yourself, et cetera, et cetera. And ultimately, people like that are wealthy, that have more resources, what they're doing, some of them, is that they're saying, hey, if cash is trash and I'm losing money holding cash, I don't want to hold it, so let me invest it. Okay. They're seeing, as I'm sure some of you have seen, that you can make crazy money investing your money in stocks, in crypto, and whatever. Even if you don't go crazy, even if you do a safe investment. For example, AT&T stock. It's a favorite of retired people for its reliable dividend. So if you own AT&T stock, you get roughly about a 7% dividend. And it's considered a very safe dividend because they've increased it and paid it year after year for like 35, 40 years. I don't remember the exact number. Throughout all sorts of different economy, different times, through wars, through recessions, whatever. They've consistently paid that amount. They're giving you 7%. Meanwhile, you can borrow money at 3%, right? If you're wealthy and you have more resources, you can borrow money even cheaper. If you get a mortgage, record low rates, it's like 3%, right? So the borrowing cost of cash is very low because rates are low. Meanwhile, you don't have to take a huge risk to make more money than you're paying in interest, right? I just told you about the BlockFi example where you make 8.6%. So some people are taking it to the extreme of borrowing as much money as they can and investing it into things because they'll make that difference, right? Even if they're wrong about inflation, right? They'll still make that difference in the rates. They're borrowing for 3%, they're investing, they're making 8%. They just made 5%. Relatively risk-free. Again, it depends, but I think you get the point. Personally, from my research, from my opinion, what I've done, I found to be the biggest protection against inflation is three things that I've really zeroed in on personally. Equities, which are stocks, precious metals like gold and silver. Gold has historically been a good hedge against inflation. But what really has stolen the show is the third one, which I think is Bitcoin. And again, this has gone on for quite a bit of time already. I don't want to, that can be a whole episode of itself talking about Bitcoin and cryptocurrency, but I kind of alluded to why it's a hedge a great hedge against inflation because it's a fixed supply. There's no Federal Reserve Board in Bitcoin that says, hey, let's make some more Bitcoin. Nobody can do that. So it's a totally fixed number. And as more dollars get printed, you'll see as there's more stimulus packages that are sent out, the price of Bitcoin goes up. And a lot of people are starting to get into it now because they see what's happening and they view it as a real protector of their wealth. There's this guy, to me, it's a great example. He's the CEO of a public company in the Fortune 500 called MicroStrategy. His name is Michael Saylor, and he put pretty much all the money that they had in the bank, which was hundreds of millions of dollars, into Bitcoin. Because he's like, if I keep my money and don't do anything, I'm going to lose half my value in a couple years. So you work hard to build up that cash, and then in a few years, half of it's gone because of inflation. So he put it all into Bitcoin. Bitcoin, it was like 12,000 at that point. It tripled, it doubled, it tripled, it quadrupled, and he just kept buying more, and he kept buying more, and then it kept going up more. And he is an example. The reason I bring him up is that he's now borrowing money and using the money that he borrowed to buy Bitcoin, which is wild. So this is the power of Bitcoin. He's borrowing money, he's getting debt from people, and he's throwing it into Bitcoin. So I think I saw recently he borrowed $1 billion. He put it into Bitcoin. Bitcoin went up. So now his $1 billion is worth $2 billion. And he can pay off his debt so easily because it went up. And then he borrows even more debt, and he keeps doing it. And it's like this cycle where he's accumulating more Bitcoin for free, pretty much. And it's gotten to the point where he's making, and you can invest your Bitcoin into BlockFi and get interest on your Bitcoin as well. I think it's like 6% interest. He's making more money on his Bitcoin interest than his entire company of 20,000 employees working makes. That company that he built over decades and decades, he's making more money in Bitcoin interest. Wild. Crazy. So if you follow me on Instagram, or if you follow me on social media, or if you just know me personally, you know that I've been a big believer in Bitcoin for a while. I fortunately got some friends and family into it a while ago, and I was always thinking about becoming more public about it. But to be honest with you, it's always scary telling people what to do with their money because you could be wrong, right? So a lot of my friends, I was telling them to buy Bitcoin at 9,000. I'm like, guys, I'm convinced I'm the weirdo at the party yelling at people about inflation and buying Bitcoin, blah, blah, blah. And some people listened, most didn't. And I remember leaving one of these events, and I was talking to my wife, and I'm like, man, I'm a weirdo. Like I couldn't control myself. I did it again. I started ranting about Bitcoin, and I hope people don't think I'm crazy. And, a few months go by, Bitcoin's 35,000. And some people did extremely well. And they told me, you should be more vocal about this. You shouldn't be afraid to share your opinion. And then, of course, I have some people that come up to me and say, hey, can I buy it now? Should I buy it now? Should I buy it now? It's 40,000. What do you think? It's too late. It's too late. And I'm like, man, with my luck, I'm going to tell you to buy it now, and it's going to drop in half, and you're going to blame me. Even though I told you to buy it when it was 9,000, you didn't listen, but it's going to be my fault. However, I feel comfortable now. If you think you missed the boat on Bitcoin, I think we're really in the early stages. Yes, you missed a lot of the ride, right? You missed a lot of it, but there's a lot more to go. It's still starting. In my opinion, I think I'll go public with this on the podcast. As I'm recording this, it's about 53,000 in the low 50,000 range right now. I think by the end of 2021, I'm almost. I don't want to sound too optimistic, but I feel very confident that Bitcoin will be over 100,000. In my opinion, it may touch between 250 to 300,000 this year. I don't know if it'll end it there. I don't know if it'll end the year there, but I think it'll end the year above 100,000. So I'll leave it there. I think I covered a lot of stuff in here. I hope you guys found this helpful, valuable, useful. Please interact with me. Let me know whether it's on Twitter Instagram, send me a DM, send me an email, go on the website, boundtoberish.com. However you can, please let me know. Leave a review. I want to get more interaction and engagement for people so that I know what kind of content that you want to hear, what kind of, information helps you. Like, I really want to talk about this because I think it really impacts people. Whether you're listening and you are being impacted or your parents are being impacted, you need to know this to take action. So hopefully this lit a fire under you. Even if you're not convinced, hopefully you'll look into it more, you'll research it more, you'll think about it more, and maybe if your eyes are open to it now, you'll see it more. You'll see it around you more. But yeah, let me know if you found it valuable. People ask me, what can they do to help me? There's not much I ask for. I think sharing the show on social media to get other people listening really helps the show. It doesn't really help me, it helps the show because it allows me to get more people. I told you at the beginning, because I got to number 60, all of a sudden everyone wants to come on the show. So getting more people to listen, getting more people to leave reviews, that helps the show get better and get more people, and maybe get people to do some editing and stuff like that. So to me, that is all I ask for. If you want to go above and beyond, just consider using any of the links of stuff I mentioned. There's something in it for you. There's something in it for me. Otherwise, want to buy me a coffee? There's a link in the show notes. Buy me a cup of coffee. I'll give you a shout out. I sip a cup of coffee during every show, and I don't discriminate. I love all kinds of coffee. It doesn't have to be Starbucks. I love Dunkin', 7-Eleven, even McDonald's, has underrated coffee. And don't knock it until you try it. I'd really like to do a Q&A episode. So if you've, if this episode or this conversation sparked any questions in your mind, if you want me to get into detail on anything more, if you're trying to think about what you should be doing on something based on what you heard, please submit your question. There's a link in the show notes. There are no stupid questions. Trust me. If you have a question, odds are many other people have the same question. I look forward to doing that Q&A. If you have any people that you'd recommend for as a guest on the podcast, please let me know. I'm looking for interesting people. They don't have to be entrepreneurs or CEOs, right? They can just be interesting people doing interesting things. And with that, I will sign off and let you guys go. Thank you so much. I'll talk to you soon. And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.